Hey everyone, it's Tuesday, March 22nd. I'm going to go through a couple things that are happening on the global level, how that can affect your crypto, what we can expect moving forward. This isn't financial advice. Nobody has a crystal ball. This is just my take. There have been a lot of developments with the US dollar. The question on the table by a lot of people, including Morgan Stanley and others in the banking community, and that's my background is banking, is the US dollar headed towards a fall? And this would be catastrophic for the US. Now, why might this be happening? So, we all know about the Ukraine Russia conflict. When we removed certain Russian banks from SWIFT, and keep in mind, not all of them, it really sent a message to the entire world, including people that are on our side in this conflict, that the United States has the ability to pull the nuclear option on the financial end and cause some real problems. And if you're a leader of a country, whether you're our ally or not, you don't want to be completely beholden to somebody on their banking side like that. So, a lot of people are moving over to SEPs, which is the Chinese version of SWIFT. Russia was prepared for this and immediately moved their banks that weren't removed from SWIFT over. The ruble crashed pretty dramatically immediately, and that caused a chain reaction of certain things. So one of the things that's happened very recently, to keep an eye on as far as the crypto community and the blockchain community is concerned, is that Saudi Arabia has announced that they're looking into going with the yen for oil. Now, the United States is on the petrodollar. We've set this up for a long time with the Saudis, and they've been one of our biggest allies, right, wrong, or indifferent, for a long, long time, and they have a large impact on our economy. I think there's about 1.1 million jobs directly tied to Saudis and oil. The administration in place right now is not a big fan of oil. They've announced that during the president's run and the first day in office, they stopped the Keystone Pipeline. And since then, you've seen a pretty consistent push to what they believe is the future, which is renewables. And candor probably is. It's just a matter of timing, and doing it in the right way, and whether it's forced before everybody's ready for it. And I'm not going to talk about that. That's not my expertise. What we can see now is that India is now buying Russian oil. The Saudis are now negotiating with China, and China, of course, is working directly with Russia. Just those four nations alone are over half of the world's population. So you're talking about a major shift from the US dollar being the primary financial instrument traded worldwide. Everybody had to have dollars and trade oil for dollars, and have a certain reserve for dollars. Russia and China have been sort of moving away with that for years in anticipation that this might happen. Other nations have not, and now we're starting to see some shifts, and that's concerning because if the U.S. does lose our status as being the reserve currency of the world, all of us here in the United States, an estimated all of us become about 25% poorer overnight. So the United States would, essentially move into being a second world country as opposed to the richest country in the world for a very, very long time. Now, also, just to keep in mind, a lot of NATO countries are still buying Russian oil, including Germany, Poland, Norway, Switzerland. Let me see. Let me make sure I'm not just saying so. Germany, Bulgaria, that's not Greece, Italy, Hungary, Poland, and the Netherlands are all still buying Russian oil. So, what does this mean? Right now, everything's pegged to the US dollar, including Bitcoin and everything else that you have. You can see on your Coinbase account exactly one Bitcoin equals whatever. Right now, it's hovering at about $42,500 plus or minus dollars. So it's really tied to the US dollar pretty heavily in terms of how they're putting it out. And when you trade your Bitcoin in, you're going to trade it in for US dollars. The United States is now looking heavily into digital currencies. So, in Biden's last executive order, he said to look heavily into the CBDCs, which are just digital dollars, and gives a different instrument for us to trade in. I don't know that it'll be the petrodollar. That's the big thing here because without the Saudis being on board for this, and it sounds like there's a bit of a rift caused by some of the work that we're doing in Iran with the nuclear deal. That doesn't make the Saudis happy. There's also been some public comments about MBS from this administration that doesn't make him happy. I'm not sure that the Saudis are on a good front with us. The Chinese aren't, and the Russians aren't. It doesn't, and the Indians aren't. So it doesn't look real good as far as the stability of the U.S. dollar right now. Now, this may not happen overnight. It may take some time, but I think you're going to start to see a shift from people holding on to dollars because of the risk and moving them into other assets and instruments and or businesses. You're going to see commodity businesses be hot, cryptocurrencies, specifically Bitcoin and Ethereum. Ethereum being something that Wall Street is now starting to dive into. Some of the other ones like Cardano will probably benefit as well from this. Ethereum is actually moving to proof of stake as opposed to proof of work. So they're moving into a more carbon neutral environment, which is really going to bring a lot of these companies that are not investing in Bitcoin because they are proof of work and burn so much more electricity, move it into the Ethereum realm. And Ethereum will also be deflationary. They're going to start burning coins. So expect in the next 60 days, assuming removing other factors in the market, like 50 basis point Fed funding rate raises. I think Ethereum is really going to benefit. When you have organizations like Blackstone that are now getting into cryptocurrencies, and Blackstone is very much into the carbon zero piece, and they have trillions of dollars worth of assets that they manage. And they're probably not going to tie those assets to Bitcoin because they are proof of work. You're going to look at places like Cardano and Ethereum as big beneficiaries because both of them are on the proof of stake platform. There are others too, but those two in particular are real projects with real technology that investors seem to be open to investing in from a large scale perspective. So that's something to keep an eye on. Otherwise, you're going to probably see Bitcoin still benefit a lot because as the U.S. dollar dominance comes down and as there's more turmoil, once the markets sort of price in all the rate raises, there is going to be a rush to figure out what you can do to keep your money from inflation. And we're already seeing massive inflation. It's 7.9% officially, but if they were tracking it the way that they tracked it with the same formula from the late 70s, early 80s, it'd be over 15%. So it's a big issue. It's about to get way worse with the supply chain issue. So people are trying to figure out what can you do with your money that's safer. Gold, not such a great thing. It's going to be better than some things, but it's tough to move. It's tough to travel with. It's often confiscated. It's heavy. It's not like you can go shop with gold. You have to kind of transfer it in again for US dollars here in the United States. So there's a lot of issues there. Plus, it's not increasing as much as inflation. The long-term play on that is more, hey, I'm going to do a little bit. A lot of people I've seen, including the Buffett team, has said that they don't like gold and silver. They actually prefer to invest in commodities companies, places that create food, water, other things like that, because they can turn around and even if the inflation is doubles, the price doubles, they can still sell it because people still have to eat and drink. So people will just pay twice as much. They still make their profits. It becomes safe and consistent to them as long as obviously they can get the product and the supply chain hasn't completely melted down. So you are going to see a lot of people start to look at crypto as being one of the safest places to be right now. Real estate's real tough to find, and you have to invest quite a bit. Prices of homes nationally, the average price is now over $500,000. I think. Let me pull that up. Average home price in the U.S. has jumped dramatically. So it's not like you can just go out and put in 20 grand that you have into a home and do okay there. Plus, once it's in there, if you want to actually get your money out, it's a bit of a medium home price by state, 215, 300. I just don't believe that a bit. I don't know where they're getting that one bit. I don't know if anybody else has done that. Typical home values, average home 390. Yeah, price by state. Uh, yeah, so it depends on what obviously which state they're saying medium, but median's not the average. That's average. That's just the middle of the pack. Well, you can still get a home for a couple hundred grand either way. Yeah, I'm sure it depends on where it is. That's right. There's a lot of sprawling growth happening right now that's probably bringing that down. Either way, crypto, you don't have to put quite so much in. If you have a couple $100 lying around, you're looking to protect it, you could do that as well. Next time out, I'm going to talk a little bit about hot wallets versus cold wallets because there are advantages and disadvantages to either. And you may not want to leave all your money up on an exchange in a hot wallet where you don't necessarily own it. We'll tie through that. Today, just wanted to give you a quick rundown of what's happening in the markets, why it's happening. We'll dive into more into the inflation later and some other things that are happening. I see very good things for crypto, assuming that this executive order doesn't come and hammer everybody out of the blue when um, all the administrative government agencies come back with the recommendations. So far, so good. Seems positive. FCC is losing the XRP case. It looks like, although you never know till the judge rules. That's very positive for crypto. The different Fed funding rate rises are going to really do damage to the markets, and crypto has been sort of matching up with the technology markets of the Nasdaqs. Will that continue, or will it bifurcate and crypto go in a whole different direction as the technology stocks get hammered? Will crypto sort of move in its own direction? That's yet to be seen, but I'm anticipating that the answer is yes. Although I do think we're going to see a thinning of the herd. We're not going to see quite so many coins. A lot of them don't belong to be there. Quite honestly, there's a lot of junk out there. So we'll get into all that in future live streams. In the meantime, hope everybody's having a great night. I'll see you all tomorrow, and God bless.